In budget 2021, when the FM cut import duties on certain kinds of steel, we had seen a cut in steel prices as well. In fact, in the month of February, steel prices cooled off quite a bit. There were no real price hikes as such, it in general put a cap of sorts on HRC prices. But then the Chinese markets, which was shut for the Lunar New Year holiday, came back, and that too with the bang. Since then, international steel prices have been on the way up. And guess what? That's the reason why Morgan Stanley believes that another round of price hikes by steel companies is imminent. Now, as per Morgan Stanley, Tangshan, which is essentially a key steel producing company in China, has said that they want emissions to be cut significantly. And this is something that will cause, firstly, steel production in China to be curtailed, and secondly, cost of making steel as well to be increased. It's anyway at record high levels of, I think, $650 per ton, as Jindal Steel told us in a recent interview. So that in itself is going to make steel making in China very difficult. Let's not forget that in India, demand as well has been very buoyant. So what's going to be the impact of all of this for Indian steel companies? Indian HRC prices have been trading between a par and a marginal discount to import parity prices. That's the landed cost of import from China. Now, post this recent correction in HRC prices in the trade market, because remember, steel mills had not reduced their prices as they were already lower than the trade market, Indian HRC prices are at an 8% discount to import parity prices. So that means there's a gap of almost $50 to $60 per ton. That's pretty big. So now, as demand is improving, as inventories as well are lower, and of course international prices have moved up the way they have, Morgan Stanley sees that there is scope for Indian steel producers to announce price hikes, although of course they do stress that nothing has been announced as yet. However, based on increase in international steel prices, they believe that a $10 to $15 per ton price hike could come for flat steel products, and for long products, secondary market prices have recovered by 5,500 rupees per ton from the bottom in early Feb 2021. So their dealer checks indicate that demand on ground has improved, and this should as well support higher prices going ahead. If of course price hikes are announced, they think it will act as a tailwind to the fourth quarter realization assumptions. Currently, they are assuming realizations to increase by 4,000 to 5,000 rupees per ton for Tata Steel, JSW standalone business, but this could see upside risks given further increases in HRC prices. However, they do see scope for maximum upsides to JSPL, and hence they see maximum potential for Jindal Steel and even a Steel Authority of India.